The asset test ratio measures a company's ability to pay off short-term liabilities with quick assets. Asset test ratio equals current assets minus inventories divided by current liabilities. The asset test ratio measures a company's ability to use its short-term assets to cover the current liabilities. In other words, the asset test ratio is a measure of how well a company can satisfy its short-term financial obligations. Let's look at how to calculate the ratio, step by step, and discuss its implications. Asset test ratio equals current assets minus inventories divided by current liabilities. The following items can be found on the balance sheet. Current assets are assets that can be reasonably converted into cash within a year. Inventories are the value of materials and goods held by a company with the intention of selling them to customers. Current liabilities can be found on the right side of a balance sheet, across from the assets. In most cases, you will see a list of types of current liabilities and the amount owed in each category. Then, you'll see a total figure that shows all of the current liabilities. What does it all mean? Inventory can often be slow-moving and therefore cannot readily be converted into cash. If it were required to be converted quickly into cash, it would most likely be sold at a discount to the holding cost on the balance sheet. Compared to the current ratio, the asset test ratio is considered a more conservative estimation of a company's financial health. The higher the ratio, the better the company's liquidity and overall financial health. A ratio of 2 implies that the company owns $2 of liquid assets to cover each $1 of current liabilities. It's important to note that a high-quick ratio, for example, a ratio of 10, is not considered favorable, as it may indicate that the company has excess cash that's not being put to use growing the business. A very high ratio may also indicate that the company's accounts receivables are excessively high, indicating a collection problem. Next, the cash ratio. What is this? How to evaluate it? And how to use this information to support you to be the greatest you can be. Thanks for watching this to the end. Click the link below to join us, giving you confidence around business and money.